one of the world's leading investors, is shorting stocks. He says he's not too optimistic about the future of our economy in 2012, and the only way to make money in the long run is to invest in commodities. Joining us from Shanghai on the Fast Line is Jim Rogers, the CEO and chairman of Rogers Holdings and also the author of the book, A Gift to My Children. Jim, it is a pleasure to have you on Fast Money.
I am delighted to be here, Melissa.
What commodities specifically are you the most optimistic about going to 2012?
Well, Melissa, I'm not sure I'm optimistic about 2012 at all, and I'm certainly not optimistic about 2013. But if I were buying anything, it would certainly be agricultural commodities going forward. We have huge shortages developing of everything, including shortages of farmers. So agriculture is going to be a great place for the next 10, 20 years.
And when we say that you're shorting stocks, what kinds of stocks, what parts of the world specifically?
Well, I'm short emerging markets. I'm short American technology. I'm short European stocks. I don't see much reason to own stocks, Melissa, when one can own commodities. If the world gets better, I'm going to make a lot of money in commodities because of the shortages. If the world doesn't get better, there's shortages in commodities, but then governments will print money. And whenever governments have printed money, the way to protect yourself is to own real assets.
Hey, Jim, Brian Kelly, you're in Shanghai, and the big question here is China hard or soft landing. Where do you come down on that?
Well, some parts of the Chinese economy have a very hard landing. The Chinese government has been trying to kill a real estate boom for 2.5 years. They've raised interest rates 6 times, raised reserve requirements 12 times. They're going to pop the real estate bubble, and they're doing it. But that's not the whole Chinese economy. There are many parts of the Chinese economy which will boom no matter what happens to real estate in Shanghai and Beijing.
Hey, Jim, quick question. You talked about the ags themselves, but as far as the equity markets, something like the fertilizer stocks, they've been beaten absolutely lower and lower and lower with every single trading session. Is there any promise in the future as far as potash, Mosaic, any of those particular names?
Well, I'm not familiar enough to give you a good comment. I just remember in the 70s, stocks went down and did nothing, or economies did nothing, and yet commodities themselves went through the roof. Some commodity stocks, of course, did well in the 70s, but Yale did a study recently showing you would have made 300% more investing in commodities themselves rather than commodity stocks, unless you were a very good stock picker. So I'm sticking with the real commodities.
Hey, Jim, it's Steve Weiss. Thanks again for being in my book. I spent a lot of time with Jim interviewing for my new book. And he travels everywhere in the world, uprooted his family from the U.S. and moved to Singapore. So he's eating his own cooking in that regard. What do you think of the other BRIC nations? We talked about China. What about Brazil that's dependent upon China to a large extent? What would you said you sold it? Would you short it?
No, I'm short India, I'm short Russia and places like that, but not, Brazil is a huge natural resource-based economy. When they're commodity bull markets, they do well. I mean, the unfortunate, and I'm not long Brazil, I have no position, the unfortunate thing is the new government is starting to do some pretty foolish things, which I think will not make them participate as much as they could have otherwise.
And Jim, you are long gold, you're long silver, but you do expect a correction to continue until about the 1,300 announced level or so? Is that correct?
Well, Melissa, I'm a terrible market timer. I'm a terrible trader. So you should watch your show or CNBC to get good prices. It would not surprise me if gold went down to 1,100. If it goes that low, I'm going to buy a lot more. I'm not selling any of my gold or silver, but I'm not a good market timer. I'm just saying that gold has been up 11 years in a row. It deserves a substantial correction. Substantial corrections are not unusual in bull markets. If it goes that low, I'll buy a lot more.
All right, Jim, a pleasure to speak with you. Thank you so much for phoning in from the other side of the world. Jim Rogers calling us from Shanghai tonight. Ron and Sana, are you with Jim on some of these trades here? Short emerging market stocks, short U.S. technology, long gold, long ag commodities?
No on the last two. Let me see. No on technology. Look, I haven't liked the BRICS all year long, and in fact, they've underperformed the U.S. on average 15 percentage points over the last 12 to 18 months. Look, I mean, you know, commodities have been in a bull market in reality since 1998 when they saw their ultimate lows. They retested them in 2002. This is a very old bull market. I think the notion that it's a new one defies logic, and I'd be very careful in the commodity space over the next couple of years for sure.
All right, I'm just looking through this press release that she just just moments ago by Mosaic. You saw some of the headlines at the bottom of your screen. Mosaic is saying that phosphate market prices have become disconnected with reality. It is going to cut production by 250,000 tons in the next 3 months. What is interesting from this press release is they're saying that as dealers and distributors focus on the macroeconomic uncertainty and delay purchases for the North American spring season, near-term supply of phosphate barges on the Mississippi has exceeded near-term demand. So uncertainty is causing people to delay purchases at this point, and that seems to be the headline coming out of this press release. Pete, you're asking Jim about these very stocks.
Right, and that exactly is what we've been watching for a while now, is the potash and the Mosaics getting beat up, and the storyline just has not changed to be able to get these turned. They're almost trading like rare earths, quite frankly, as far as they had such a great run, and now suddenly no one seems to like any of these things.
Right.
Yeah, I mean, they seem to be broken at this point, and I think you may also have, it'd be interesting if there's an MF global effect in this, because farmers have not been able to hedge their production, so they are delaying some of their seed purchases and then phosphate purchases.